Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com. Powered by EP Wealth.
Markets looked like they were going to open a little bit lower this morning, but turned it around. Not by a lot. The S&P 500 is up 0.33%. The Dow Jones Industrial Average up 1.1%. The NASDAQ is up fractionally, even though they've got some big losers, including Microsoft in that area today, and Meta's down 9.4%. Back to a big round number area of 605. Microsoft is down 4.8%, down 20 points to 404. Still, the NASDAQ's having a pretty fantastic month of April, as is the S&P 500. Microsoft topped expectations as AI business up 123% year over year. Meta stock is sinking on AI spending. It's as if Wall Street trusts Alphabet and Amazon a little bit more with what they're doing with near-term revenue opportunities off their big CapEx spends. Amazon's $364 billion backlog is the bull case for the AI spending boom. Meta looks to raise as much as $25 billion with jumbo bond sales. I know I'm throwing a lot of names around pretty quickly there, so I'll stop and try to get a little bit more focus for you. Apple reports tonight oil sinks from a 4-year high amidst war fears, but gasoline prices are strikingly higher, something the market is trying to deal with. So I hit the major markets. The Russell 2000 is also up 1.1%. Gold is up 1.5% to 46.33. I'll give market numbers year to date in just a minute because I may give you a little more perspective. Bitcoin's up 2/3 of 1% to 76,399. Crude oil's down 1.8% to 104.92. Wow. We're off and running, huh? Real quick. Meta's down 9%, down $63. Microsoft is down 4.9%, down $20 to $403. Alphabet is up $26, up 7.5% to $373. I bought the shnikes out of that last year, and through the years, I've added more to my positions, but last year was my favorite stock of the year, so why not, you know? I try to put my money where my mouth is when I'm telling you what I'm doing. This year, my biggest purchase has been tied towards Amazon, as well as SanDisk, and a couple others that I bought when the market's corrected or sold off on the "we will bomb Iran into oblivion" conversations that were happening on the markets. Alphabet, Amazon, Microsoft, and Meta, they plan to spend more than $700 billion on CapEx this year. Now, one of the things that they do is they build AI data centers, and then companies like EP Wealth or the company you work with could use your web services with them, and bam, they'll give you access to tools like Claude and AI agents, including OpenAI. Amazon is big winner here in the CapEx, as is Alphabet. Wall Street not trusting Microsoft and Meta as much, but Amazon $200 billion, $185 billion in 2026 for Alphabet. For Microsoft, they're planning $190 billion in their press conference call last night. Their earnings call, not a press conference call, but there was a lot of press releases in it. One of the things they noted was the higher memory costs are jacking up their CapEx plans for the year. And Meta up about $135 billion total this year in CapEx. So it's $200 billion for Amazon, $185 billion for Alphabet, $190 billion for Microsoft, and $135 billion for Meta. Meta doesn't really have a great way they don't have web services that are rolled out yet. So we're going to be watching them. Microsoft's CapEx outlay this year would be enough to buy every share of Disney. Caterpillar is spiking today as the AI boom is fueling demand for engines and turbines. The industrial bellwether reported revenues of $17.4 billion compared to expectations of $16.2 billion. Behind every chatbot trying to figure out our answers to our questions. Caterpillar's power generation business has been on a tear thanks to the demand for data center and the need of energy. A record backlog provides a strong foundation for continued positive momentum. The halo stocks right now that are working really well on Wall Street consistently, GE, Vernova, and Caterpillar. It's called a heavy asset, low obsolescence company that has been cashed in on the AI boom rather than being disrupted by it. Xbox console sales dropped 33% in the third quarter. That is a brand that has some work to do. Meta reported some interesting data inside of their numbers, and that includes the number of users that they use, the number of users that use their products, daily active people. So it went from a base of 2.1 billion back in 2019 to 3.56 billion at the end of the first quarter. They rake in a staggering $55 billion in advertising to our eyeballs, up 33% from a year earlier. Those are pretty drastic results. That's impressive. I'm surprised Wall Street's... I'm not surprised. The CapEx is a little out of control, it feels like. So I understand people saying, I feel like it's a little out of control. Google's businesses did great with AI, and its investments in other businesses did great as well. They've got private stakes in Anthropic, Databricks, and SpaceX. They saw massive valuation markups. Those investments haven't been cashed in yet. With all three of those investments expected to go public this year, Alphabet's massive stash of paper wealth is on the verge of potentially becoming very real, to the tune of $106 billion. It's a pretty good return. That's a pretty good return. Let's see, what else do we have to start the morning show off with? Let's do year-to-date numbers. Brent crude up 84%, sitting at $111 roughly, depending on when you mark your calendar, time of day. Silver's up only 1.7% for the year. Gold's up 5.6%. Bitcoin's down 14%. The Morgan Stanley All World Country Index up 4.6%. The Magnificent Seven up 1.8%. I was down 10+% a couple weeks ago. Russell 2000's up 9.2%. It's the big winner. NASDAQ up 6.1%. The S&P 500 up 4%. And the Dow Jones Industrial Average up roughly 1%. In economic data today, the PCE price index was up 4.5%, while the core PCE was up 4.3%. There's inflation out there. And that's going to be a story in the back half of the year. Of course, there's some conflicting stories going on, the high price of energy and oil. That'll take 3 to 6 months to really get going the flow of oil again when the strait is reopened and there's peace. So we're talking basically rest of this year. If you're talking 6 months, you're talking November. Gas prices are expected to peak in August, but expected to be up another 15 cents in the coming days. National average will be at $4.50 then. Whereas gasoline in California is $6.15 in some places, so it could go up to $6.50. Easy by peak. The first quarter employment cost index increased 0.9% on the heels of a 0.7% increase in the fourth quarter. Wages and salaries are up 0.8%. Benefit costs up 1.2%. I don't expect you to hear economic data on a broadcast and jive with it. The key takeaway from the report is that increases in wages and salaries for civilian workers over the last 12 months were up 3.4%. That's barely running ahead of inflation. Initial jobless claims for the week ending April 25th decreased by 26,000 to 189,000. The labor market is not falling apart. Far from it. It's a strikingly low number of initial claims. Personal income for March increased 0.6%. Personal spending jumped 0.9%. Spending has remained solid in the face of stubbornly high inflation, a dynamic that is going to leave the Federal disinclined to cut rates. Alphabet, let's just say world domination. They beat on search subscriptions cloud, the company's three most consequential segments. Custom TPU chips co-designed Broadcom are a big story for them. Price target roughly $400 is what I'm seeing across the board today. Accelerated Amazon Web Services growth, getting some bang for the buck that they're putting in to full CapEx. They too have their own semiconductors. That'll be the next leg for the stool to stand on. Microsoft Asia, cloud growth was 40%. Guidance for the same in the current quarter, so it was a nice number. But I think Wall Street's a little spooked with the CapEx increases. $500 price target. Meta doesn't have a cloud to lease out, so the market really doesn't like how much they're spending. And we love their revenues and their earnings. Some price cuts out on Facebook today, Meta. Easy mistake to make. $750 price target. Eli Lilly just had a monster quarter. Revenue and earnings crushed expectations. Volumes in the United States up 49%. GLP-1s had a 7% decline in pricing. Shares are up 5 to 10% this morning on Lilly. Anthropic is raising money at a valuation of $900 billion. OpenAI, the rival AI startup behind ChatGPT, recently announced a historic fundraising at a valuation of $852 billion. Qualcomm's up 10% today. CEO was a little sly on the conference call last night, saying we're starting shipping data centers chips to a large hyperscaler over the next year. Didn't tell us who. Qualcomm is had an identity crisis. For most of 20 years, it was known as the semiconductor company that had a lot of the intellectual property that went into smartphones, particularly into the modem and broadcasting signals. Then Apple said, you know what, we're going to do that chip ourselves. But Apple took their time to do it because Apple wanted to get it right so that they didn't have a generation of phones that were suck quality on data communications. So Qualcomm beat on the quarter. But because they hinted at a hyperscaler business working with them, the stock's running today. Intel's hit an all-time high. It was basically the Super Bowl of quarterly tech earnings. March quarter results from Google, Microsoft, Amazon, and Meta. Tsunami of numbers. And it doesn't look like it's softening. So some of the inside the numbers things that I saw was Microsoft, Google, Meta, and Amazon are on track to spend $700 billion on AI infrastructure in 2026. Typically, this only happens when governments or wars is where you see that kind of spending. So these guys are building the foundational mechanics of AGI. It is another layer of society getting a next step up. It's the space race. It's electricity. It's infrastructure, roads and highways. Now we're saying, AI is the next layer up. Alphabet CEO said 2026 is off to a terrific start, I would say. Cloud revenue up 63%. Wall Street likes that a lot. YouTube's ad revenue rose 10% year over year to $9.88 billion. Their ad revenue reached $77.2 billion, up from $66 billion in the last year at the same quarter. Paid subscriptions reached 350 million in the first quarter, up 25 million, driven by YouTube and Google One. Gemini Enterprise paid monthly active users grew 40% quarter over quarter. Gene Munster talked about Meta, saying CapEx is expected to grow this year by 94%. The street was expecting 76%. Gene Munster says he's surprised by investors' negative CapEx reaction. We have enough data points from history that show that investments are paying off. Revenue in the March quarter grew 33% year over year, and they guided to 28% in June. That compares to last year, revenue growth of 16%, up to 33%. So Munster's right. There's enough to like there, but when you write those numbers down on paper, it should freak you out. Microsoft CFO said AI margins are structurally stronger than early cloud transition. His quote was, "We've been talking about this where the AI business of ours has been in the cycle compared to even the cycle we saw with the cloud, which now seems very long ago, and how margins were actually better. Xbox revenue down 33%. What are they going to do with that?" Amazon reported first quarter revenue of $181 billion. Go write that number down if you ever want to have a kick. Some of the problems plaguing Meta. Yesterday, we found out that the European Commission issued a preliminary DSA finding saying Instagram and Facebook failed to prevent under 13 users from accessing their service. Something Mark Zuckerberg talked about in his quarter, that some of these expenses on lawsuits are problematic, I would say. Let's take a break here. I do want to mention that I have a Pints and Portfolio coming up on the 16th of May in San Mateo. It's a brewery. Saturday, 11 to 1. We can only fit 10 people, so we sign up 12, and that's it. You can sign up for the event at robblackshow.com. It's a good chance to meet me, meet a couple financial planners, be social, get out of the house. Tell your spouse you're going to go get a beer bought for you, see if she believes you, and talk to a financial planner to see if you're on track for retirement. I like them. They're incredibly social events, and it ties me to you. You can sign up for the event at robblackshow.com. Oh, of note, Tesla did roll off their first semi-truck. They wanted to get 50,000 off that production line.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Checking back in on the numbers as the morning has gone on. The S&P 500 is now up 0.5%. The Dow is up 1.5%. That's a big move. And the NASDAQ up 0.1%. Even though the NASDAQ's got some pretty big stocks that are underperforming today. Amazon's down $3.50, down 1.3%. Microsoft's down 5.5%, down $23. Nvidia's down $9, down 4.5%. Meta's down 8, almost 9%, down $59. Google's up nicely, up 7.6%. Qualcomm's up 16%. So there's some winners in there, but some losers. NVIDIA is one of them. We'll talk about NVIDIA and what the latest results from the hyperscalers means, or likely means, for the company going forward. I know many of you and I own it. I have an answer for you. Netflix is back to $93, up $1 today. Oracle down $1.83, down 1%. So NVIDIA is tumbling today. Back to the $200 level, or slightly just under it. The hyperscalers reported. Tonight we get Apple, but today we're focusing on the hyperscalers. The 2026 CapEx guidance for this group, which went up about $15 billion thanks to Meta's and Google's updates. It basically is short-term really good for NVIDIA. It's one of the biggest suppliers to all four firms, but the AI boom is evolving. And one reason being offered for NVIDIA's sharp sell-off is its most important product, GPUs. They're no longer the key missing ingredient in the AI boom. They're now something that these companies are trying to do without, while building up their own suite of offerings. After a spike during the fourth quarter earnings, hyperscalers aren't talking as much as about the OG brains behind the AI boom. They're talking about their own chips. CEO Andy Jassy said, quote, "Nobody has a better set of chips across AI and CPU workloads than Amazon Web Services with Trainium and Graviton. We're unusually well positioned for this AI inflection. We're in the early stages of experiencing. While the largest number of AI chips we're bringing in are Trainium, we continue to have a deep partnership with NVIDIA. Microsoft CEO Satya Nadella said our Maya 200 AI accelerator offers over 30% improved tokens per dollar compared to the latest silicon in our fleet. It's now live in our Iowa and Arizona data centers. Their Cobalt server CPU is deployed in nearly half of their data center designs, running workloads at scale for customers like Databricks, Siemens, and Snowflake. Largest customers scale their AI deployments. They're increasingly leveraging other services across our platform and choosing to run those workloads on Cobalt. Google CEO Sundar Pichai says we are in a unique market because of our vertically optimized AI stack and the way we co-develop the components from our infrastructure models to platforms to the tools and applications and agents. The fact that we own our own frontier models, own the silicon, really helps us stay ahead of the curve. Zuckerberg from Meta says we're focused on increasing the efficiency of our investments. And as part of that, we're rolling out more 1 gigawatt of our own custom silicon that we're developing with Broadcom, as well as a significant amount of AMD chips to complement the new NVIDIA systems that we're rolling out as well. So you can hear from all four major CEOs that they got some of their own chips for the next level of AI. So the first was heavily dependent on NVIDIA. And what that implies is as they switch from training the models to throwing them down into the web services to creating agents that run in those web services, it's just less intensive on NVIDIA at this time. Don't forget, these chips are all going to have to be replaced every 3 to 5 years, depending on burnout and workload. So 2020 hindsight in NVIDIA, like every chip company, has been on an absolute just killer run. Since the market bottomed in late March, chip designers' sharply rising sales estimates strongly imply that hyperscalers' hardware offerings are meant to augment rather than replace demand for the most valuable company products from NVIDIA. I want to mention that my opinion is that GPUs aren't the missing ingredient anymore. It's partly true. If you lean too hard into it, you'll miss what's actually happening. This is an evolution, not a replacement. The sell-off isn't about demand collapsing. It's about investors repricing NVIDIA from only game in town to best player in a more competitive stack. Early AI boom, GPUs were the bottleneck. Everyone needed more from NVIDIA at any price. Now supply has improved. The bottleneck is shifting to power, networking, data infrastructure, and cost efficiency at scale. GPUs are still critical, but no longer the only constraint. Hyperscalers are moving up the stack. And again, Amazon's got Trainium and Inferentia. Microsoft's got Maya chips. Google's got TPUs. Meta has custom silicon. Is their push? It is all going to reduce some dependence on NVIDIA at the margin. They're not replacing NVIDIA wholesale. They're optimizing specific workloads tied towards inference. NVIDIA still dominates training and cutting-edge models. I expect custom silicon is going to equal pricing pressure and compress margins at NVIDIA over time. NVIDIA is priced like it would capture all AI economics. CapEx does not equal NVIDIA revenue anymore. It's not one-to-one. More dollars are going into in-house chips, into networking, into data centers, and like a lot of the CEOs mentioned, into higher cost components like memory. NVIDIA still has CUDA, the ecosystem. That's a huge moat. They still have best-in-class performance. But again, growth is probably going to go from explosive to normalizing, i.e. strong. This is not the end of NVIDIA. It's the next phase of AI. GPUs aren't disappearing, but hyperscalers are building around them, which means NVIDIA goes from being the entire story to just the most important piece of it. I hope you get that. I still like the stock. But again, is it going to be explosive as it was in the last 3 years? No. Back to gasoline real quickly. So gas prices are at $4.30 nationwide. San Francisco saw $6.14. Brent crude's up 25% in the last week. The average household uses about 90 gallons a month of gasoline. You do the math, and that's an extra $110 a month, $1,300 annually. That doesn't dent my wallet much, but it does cut down how much money I have going to restaurants, travel, and maybe retail. Lower income households are where it's felt the most. The bottom 20% of earners spend 10% of their income on energy. So I expect the higher gasoline prices, which are, again, expected to peak sometime this August, unless things get really out of control in Iran. I'm expecting Iran to open back the Strait of Hormuz probably in a month, maybe less. I'm not a war expert, but I can see that there's some humanitarian disaster happening there. And that tends to get the ball moving for everyone. There's freak out in media saying international flights are going to come to a standstill. It's a little too much. But we are going to see higher cost on groceries, especially fresh food that has to be shipped to our stores. Airlines, their tickets are going to go higher because airline fuel's more expensive. Shipping across oceans, more expensive. Shipping from trucks to your home, more expensive. They're feeling that, extra 40% higher in gasoline and diesel costs are even more high. More high. What's wrong with my grammar? So we're looking at 4 to 6 months for the Strait of Hormuz to be operational and at 100% again. That's at the minimum. Some analysts see a year. This is going to be a very interesting election, to say the least, coming up in November. Because even if it ends today, 6 months from now is past the November elections, or at least deep into them. The silver retirement. Retiring boomers are starting to drag on the economy by $4.1 billion. Labor force participation for Americans aged 55 and older dropped from 40% in January 2020 to 37% in March. That's the lowest in 20 years. Tesla is rolling its first semi-truck off the production line. I mentioned that earlier. Now I want to mention it with a little bit more class. It's the first semi-truck. It's rolling off in high-volume production line, but it's one. Tesla has a target of 50,000 units annually. It offers 40% to 70% fuel cost savings over diesel with range of about 500 miles. The truck might cost roughly $290,000. One good reason to get married is less cancer. Cancer researchers are now offering a good reason to get married. The Wall Street Journal is reporting that a recent study of 4 million U.S. cancer cases found that cancer rates were 68% higher for men who had never been married. For women who never tied the knot, the cancer rates are 83% higher. Married people often have more economic stability and stronger support systems, as well as they tend to drink and smoke less. Chipotle, they're serving up positive comps as transactions return to growth. April trends improved. They're trading higher. The fast casual burrito chain revenues increased 7.4% year over year to $3.1 billion, above expectations. Chipotle Mexican Grill reaffirmed its 2026 comp guidance of about flat, but investors appear encouraged by the return to positive comps and transaction growth. The report's encouraging. The improvement was modest, but management's commentary around April momentum and second quarter comps around 1% suggests Chipotle is building a stronger base with trends tracking ahead of expectations year over year. Restaurant level margins also remain a watch item, though Chipotle Mexican Grill expects the price cost gap to narrow in the back half as it laps elevated beef costs. Overall, this was a step in the right direction for Chipotle. It'll be important to see whether the renewed momentum from menu innovation, rewards, and better restaurant execution can sustain the improvement as it works through still dynamic consumer backdrops. Meta's highlights, given a final wrap up on them, highlights a widening gap between strong execution and investor concerns around capital intensity and return visibility. Core ads and AI-driven engagement remain robust. The market's focused on the lack of near-term monetization tied towards surging AI investments. Google's got cloud growth and backlog providing a clear playbook on the payback. Meta's build first, monetize later approach implies a longer investment cycle and potential free cash flow pressure over the next 12 to 24 months. If I owned Meta, I would just be cool with it. If I wanted to get a long-term winner, I would add to it, but I would expect nothing over the next 12 months. Anything you do get, you'd be materially happy with. They need their own custom silicon to improve efficiency longer term. Meaningful margin benefits likely won't materialize until 2027, when you'll have a clearer picture. Final thoughts on Amazon. They delivered an impressive quarter, highlighted by reaccelerating Amazon Web Services growth and continued strength across its retail operations. The scale and speed of Amazon Web Services expansion, particularly on such a large base, underscore the durability of the cloud and AI demand, while the emerging chips business adds another compelling growth lever that remains underappreciated. The market appears focused on the company's aggressive investment cycle, with capital expenditures remaining elevated and likely to increase further as Amazon builds out its AI infrastructure. Combined with a sharp rally of more than 30% over the past month, the post-earnings pullback looks more like a reaction to the spending intensity and perhaps some of the sell the news reaction. Your car with Google built in is about to get smarter thanks to Gemini. I saw this story on GM yesterday late, and then I saw the Google blog that it was based on this morning. GM's going to roll out Google Gemini across 4 million cars. That's interesting right there. GM shared the company will be rolling out the AI model to all GMC, Cadillac, Buick, and Chevrolet vehicles starting with model years 2022. Where they have Google built in. With Gemini, you can speak naturally without memorizing commands or repeating context. GM says Gemini would summarize and read incoming texts, as well as send out text messages, help plan routes, and play music that fits a mood. The model would also engage in conversation with the drivers to help discuss ideas, amongst other things. GM's earnings were a hit. They reported revenue of $43.6 billion in the quarter, exceeding the market consensus of 43.5. They did 43.6. Earnings per share came in at $3.70 a share versus expectations of $2.60. Some of that was tied towards tariff refunds. So I found that interesting that Gemini is going to be getting into GM's kind of like right now. Do I want you to do anything with that? No, I don't see an app there that's killer. Gemini will be a helpful AI assistant. You'll be able to speak naturally. It's something that being built into cars is nice. And if you have a Google phone, it's really quite intelligently working with it. You can get real-time updates about your journey with Google Maps. You could ask things like, since I'm going to the stadium, where's the best parking space near it? And Gemini will go to work on the AI side of that and help you. I don't think it's a game changer to say, hey, Google, I'm feeling kind of depressed and I want to hear some jazz music. Jazz music make me want to die. No, I'm not knocking jazz music. But one of the cooler things about it, and this isn't going to make me want it or change my car, because I look at a car as expensive, and I like showing my kids that you can drive a car for 10 years, 15 years, 20 years. But if you're heading to Lake Tahoe, you can say, hey, Tahoe, Gemini, tell me some interesting facts about Tahoe, or what are the best restaurants? Book me a reservation. The one that I've always wanted is when you're looking for a bathroom or a gas station or like a McDonald's to pee at. Anytime you use Google Maps, it doesn't really, it tells you which ones are closest. It doesn't really tell you on your path. But I know, if you have a co-pilot, they can sit there and zoom in on the map and find things, but not terribly helpful. And if you're in Tahoe, for instance, and you say, I want to go on some hikes, can you recommend some good options? Gemini will go to work. It'll email you a summary, so when you get there, you can sit down and look at your results if you want. So modern cars are packed with features that, in theory, should make our life safer. So getting some of this technology up in the game, I think, will help. Hitting the road with Gemini. I don't know how I really feel about that, but it's not bad. But I do feel it's a lot press release. I'm going to go through some breaking news, see if I see anything here that needs to be knocked on. President Trump nominates Dr. Nicole Saphier to be the next U.S. Surgeon General. Atlanta's Fed first estimate for second quarter GDP is 3.7%. Stocks that traded to new 52-week highs are outpacing decliners. New highs are at 62, new lows are at 20. Taking a look at the new lows chart, I don't see any stocks that we own, so. That feels a little bit good. And with some of the new highs, obviously, Google, HP, Philip Morris. I see some other ones. Pump, Power, PWR, Arch Daniels Midland. Kind of a boring list. Sorry I went down that path. I wasted 15 seconds of your life, which you'll never get back. Wayfair had a good quarter, and they're able to demonstrate that it can grow in a still sluggish backdrop, supported by order growth, improving customer engagement, and its continued ability to take share. Wayfair has a lot of furniture that it can deliver. I didn't really know Wayfair until the pandemic, when we basically had a vacation home that we had already bought, but we were very slow to make it into a real life home. And we decided to live there during the first 6 to 9 months of COVID. It was great. Got a lot of furniture. Some of it was from Wayfair. Meta Platform CEO Mark Zuckerberg and Apple CEO Tim Cook are interested in purchasing the Seattle Seahawks NFL team. That's interesting. Odd fact of the day. Caterpillar's results powered by construction strength and robust power generation demand. Blowout of a quarter. Dealer inventories were a major revenue driver. Caterpillar said dealer inventory increased more than first quarter of 2026 than in the first quarter of 2025. Boosted sales volumes, especially in construction industries. Operating margin held at 17.7% and 18% adjusted. Good, solid company. Microsoft, I want to give the final opinion on them for this morning. Microsoft delivered a strong quarter, highlighted by impressive Azure growth and continued momentum in AI-driven services. The upside in Azure, along with confident guidance, pointing to sustained high 30% growth, reinforces the view that demand remains robust and still exceeds available capacity. That said, the sharp ramp up in capital expenditures, particularly the Street expected a jump of about $40 billion, but this was $190 billion. And that gives some investors pause. Management remains confident these investments will generate strong returns. But that's like your kid coming to you and saying, I need $25. And then when they actually come to collect the money, it's like, oh, no. Costs have run up on prom and I need $100 now. And you're like, well, it's still the same prom that you were going to do for $25. Now, why is it $100? It's not the best example. President Trump is considering diplomatic and policy options to push Iran to open the Strait of Hormuz while continuing Navy blockade of Iranian ports. Final thoughts on Google. Their results mark a clear inflection point where AI is no longer an experimental tailwind, but the central driver of growth, monetization, and margin expansion across their business. Google Cloud's emergence as a high-margin, hyper-growth profit engine, supported by massive backlog expansion and accelerating enterprise AI adoption, materially strengthens the company's long-term earnings power. Importantly, search appears not only resilient, but reinvigorated by AI integration, countering prior concerns around disruption while improving efficiency economics. The aggressive step-up in CapEx and forward spending signals unusually high conviction from management that demand for AI infrastructure will remain durable for years. Meanwhile, continued scaling across Gemini subscriptions and other bets like Waymo reinforces the breadth of Google's AI ecosystem. Analysts see multiple growth engines firing simultaneously and visibility, supported by backlog and usage trends. The setup for the rest of 2026 and 2027 looks compelling, albeit once again with that elevated investment intensity. Apple's reporting this afternoon. I'll do a big piece on Apple on the Friday show. I'll cover the earnings on tonight's podcast, but I'll do a whole segment on it because the timing of a Thursday night doesn't play well, terribly for a lot of people. President Trump said that he's going to sign an executive order today to expand access to retirement plans for workers. That hits companies like Schwab, ticker symbol SCHW, T. Rowe Price. Paychex, ticker symbol PAYX. T. Rowe Price, TROW. Don't forget to have a podcast that you're listening to now, probably. Yes, you are, because this one is not also broadcasted. The afternoon show is broadcast at 5 p.m. on business stations. I do 2 podcasts a day, one in the morning, one in the afternoon. You can find me online at robblackshow.com. Pints and Portfolio coming up next month. Be the first to sign up for it. robblackshow.com. It's in San Mateo. I buy the beer. We talk financial planning. Maybe we talk a little baseball. Sign up for the event at robblackshow.com. That's robblackshow.com. See you this afternoon.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not on offer to sell or a solicitation to buy any security. Member FINRA SIPC.